Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a general upward trend, with the recent dip below $94,000 likely a temporary correction. The forecast price also suggests continued upward movement, reaching nearly $100,000 in the coming weeks. This upward momentum aligns with the support price being significantly lower than the current price, indicating strong buying pressure. Therefore, I recommend a long position on Bitcoin with an entry price around $96,000, a stop loss at $94,000, and a target price of $101,000. This strategy capitalizes on the bullish outlook for Bitcoin, aiming to capture the projected price increase over the next few weeks and months. The stop loss protects against potential market reversals, while the target price offers a reasonable profit potential based on the forecast. Based on the provided price information for Bitcoin Cash, a short-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with a recent dip, while the forecast suggests a slight downward movement. Although the support price sits at $434.30, the resistance level at $479.1 indicates limited upward potential in the short term. Therefore, a short position on Bitcoin Cash is recommended. A conservative entry price of $455, aligning with the forecast and slightly above the current price, would be prudent. The stop loss should be set at $465 to protect against unexpected price surges. The target price can be set at $435, aiming to capture potential downside movement before reaching the support level. This strategy allows for capitalizing on the anticipated price decline while managing risk effectively. Based on the provided data for stacks, a short-term bearish investment strategy appears most suitable. The 2-week price history shows a fluctuating pattern with a slight downward trend. The forecast price also suggests a decline over the next week, indicating potential for profit from a short position. Considering the information, an entry price of $1.65 would be appropriate, aligning with the current price and the forecast. A stop loss should be set at $1.71 to minimize potential losses if the price unexpectedly rises. The target price could be $1.55, capturing a potential decline in price based on the forecast. This strategy allows for a short-term play on the anticipated downward movement of stacks, aiming to capitalize on the predicted price decrease. Given the price trends and forecast for Ethereum, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a general upward trend, with recent fluctuations suggesting a consolidation phase. The forecast indicates continued growth, albeit at a slightly slower pace. This suggests a potential for further gains in the medium term. Therefore, I recommend a long position on Ethereum. An entry price around $3,450 would be appropriate, aligning with the current price and the support level. The stop loss should be set at $3,330, below the recent lows, to minimize potential losses. The target price could be set at $3,650, targeting the resistance level and the high end of the forecast. This strategy balances risk and reward, aiming to capitalize on the anticipated upward momentum of Ethereum over the next few weeks. Given the Ripple price history and forecast, a medium-term investment strategy appears most suitable. The historical prices show a recent dip followed by a potential rebound, aligning with the forecast's upward trajectory. While the support price of $2.3093 provides a safety net, the resistance at $2.5722 suggests potential for further growth. Therefore, a long position in Ripple is recommended for a medium-term investment horizon. The entry price should be around $2.35, aligning with the forecast's upward movement and the support price. A stop loss at $2.30, slightly below the support, protects against unexpected price drops. The target price should be set at $2.50, allowing for potential gains before reaching the resistance level. This strategy aims to capitalize on the anticipated price increase while managing risk effectively. Based on the provided price history and forecast for Binance Coin, a medium-term investment strategy appears most suitable. The historical price data shows a general upward trend, with recent fluctuations around the $700 level. The forecast suggests continued upward movement, reaching around $720 in the coming weeks. This indicates a bullish outlook for Binance Coin in the medium term. Given this outlook, a long position is recommended. A strategic entry price could be around $705, aligning with the recent price action and below the anticipated resistance level. A stop-loss order at $690 would help protect against potential downside risk, while a target price of $725 would allow for capturing potential gains as the price moves towards the forecast high. This strategy balances risk and reward, aiming to capitalize on the expected upward momentum of Binance Coin in the medium term. Based on the provided data for Stellar, a medium-term investment strategy appears most suitable. The historical price data shows a period of consolidation and a recent upward trend. The forecast suggests continued upward momentum, with prices potentially reaching $0.427 or higher in the coming weeks. This indicates a bullish outlook in the medium term. An ideal entry point for this strategy would be around $0.405, aligning with the forecast and providing a reasonable margin of safety. The stop loss should be set at $0.3957, the support price, to limit potential downside risk. The target price could be set at $0.471, the resistance price, aiming to capture a significant portion of the potential upward movement. This strategy allows for participation in the anticipated price appreciation while managing risk through a well-defined stop loss and a reasonable target price. Given the price trends and forecast for Toncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show some fluctuations, with the current price hovering around the middle of its recent range. The forecast suggests a slight upward movement in the coming week, but the price action remains relatively stable. Therefore, a long position is advisable to capitalize on the potential for a small price increase. A suitable entry price would be $5.65, aligning with the forecast. The stop loss should be set at $5.58, slightly below the recent lows, to protect against any unexpected price drops. The target price could be set at $5.79, aiming to capture the potential upside movement suggested by the forecast. This strategy allows for a modest profit potential while mitigating risk with a tight stop loss. Given the price trends and forecast for Cardano, a medium-term investment strategy would be most suitable. The historical prices show a recent upward trend, with the current price hovering near the support level of $0.9675. The forecast indicates a potential for further growth, with prices expected to reach $1.12 within the next week. This suggests that Cardano could be poised for a continued upward move. Therefore, a long position is advisable to capitalize on this potential. An ideal entry price would be around $0.975, slightly above the support level, allowing for a small buffer. The stop loss should be set at 96 cents, just below the support price, to minimize potential losses. The target price could be set at $1.10, aiming to capture a significant portion of the forecasted price increase. This strategy balances risk and reward, allowing for potential gains while mitigating downside exposure. Given the price trends and forecast for Litecoin, a medium-term investment strategy appears suitable. The historical prices show a generally upward trajectory, with recent fluctuations indicating a potential consolidation phase. The forecast suggests a continued upward movement, reaching $116 in the coming week. This aligns with the support price of $109.90, indicating a strong base for further price appreciation. However, the resistance at $126.11 suggests that the price might face some resistance before reaching its full potential. Therefore, a long position is recommended for Litecoin. A suitable entry price would be around $110, aligning with the forecast and allowing for a margin of safety. The stop loss should be set at $109.90, just below the support level, to minimize potential losses. The target price can be set at $120, aiming for a moderate profit before encountering potential resistance. This strategy allows for capitalizing on the upward momentum while managing risk effectively within a medium-term investment horizon. Based on the provided data for Doge-Coin, a bullish investment strategy appears promising. The historical prices demonstrate a consistent upward trend, culminating in a recent surge to $5.28. Although the price has slightly retreated, it remains above the significant support level of $4.7175. The forecast predicts further price increases, with the projected price reaching $5.76 within the next week. This positive outlook, coupled with the current price being relatively close to the support level, suggests a favorable entry point for a long position. Therefore, I recommend a long-term investment strategy for Doge-Coin. An ideal entry price would be around $4.95, allowing you to capitalize on the potential for further price appreciation. A stop-loss order should be placed at $4.75 to mitigate risk in case the price drops unexpectedly. The target price could be set at $5.60, aiming to capture a substantial portion of the projected price increase. This strategy leverages the positive price momentum and forecast, while incorporating risk management measures to protect your investment. Given the price trends and forecast for Aptos, a medium-term investment strategy would be most suitable. The historical prices show a slight upward trend, with the current price hovering near the support level of $8.73. The forecast indicates a potential price increase over the next week, reaching around $9.40. This suggests a bullish outlook in the medium term. Therefore, a long position is advisable. An entry price of $9 would allow you to buy in at a price slightly below the current market value, while the stop loss should be set at $8.75 to protect against any unexpected price drops. The target price should be set at $9.75, aiming to capture a significant portion of the potential price increase predicted by the forecast. This strategy allows you to capitalize on the anticipated upward movement of Aptos while managing risk effectively. Given the price trends and forecast for SE, a cautious investment strategy would focus on a medium-term approach. The historical prices show some volatility, but the overall trend seems to be sideways, with a slight downward bias. The forecast suggests a potential slight upward movement in the coming weeks, but the price remains relatively close to its support level. Considering these factors, a long position is advisable, aiming to capitalize on the potential for a modest price increase towards the resistance level. The entry price could be set at $0.425, slightly above the recent lows and below the resistance level. The stop loss should be placed at $0.4185, the support price, to limit potential losses. The target price could be set at $0.4709, the resistance level, allowing for a reasonable profit margin. This strategy balances risk and reward, taking advantage of the potential for a modest price increase while limiting potential losses. Based on the provided Ethereum Classic data, a short-term investment strategy appears to be the most suitable approach. The 2-week price history indicates a slight upward trend, but the 1-week forecast suggests a potential pullback. The current price is hovering near the resistance level of $28.48, making it a good entry point for a short position. Therefore, I recommend taking a short position on Ethereum Classic with an entry price of $28.40. The stop loss should be set at $28.60 to limit potential losses if the price unexpectedly rises. The target price for this trade would be $26.50, aiming to capture a potential decline in price towards the support level. This strategy capitalizes on the anticipated short-term correction while managing risk effectively. Based on the provided price history and forecast for Polygon, a short-term investment strategy appears most suitable. The historical prices demonstrate a recent decline, and the forecast suggests further downward movement. Although the support price is at $0.5166, the resistance is at $0.5231, indicating a limited upside potential. Therefore, an aggressive short-term strategy would involve entering a short position at the current price of around $0.518. The stop loss should be set at $0.5231 to limit potential losses if the price unexpectedly rises above the resistance. The target price for this strategy would be $0.497, aligning with the forecast's lowest projected price. This approach aims to capitalize on the anticipated price decline in the short term. Given the price trends and forecast for AEVO, a moderate investment strategy would focus on a medium-term approach to capitalize on the potential for upward movement while managing risk. The historical prices show a slight downward trend over the past 2 weeks, but the forecast suggests a potential rebound in the coming week, with prices possibly reaching around $0.382. The support price sits at $0.3889, providing a safety net for potential price dips. The resistance is at $0.4083, indicating that there is some room for upward movement. In this scenario, a long position is advisable to capitalize on the potential for a price increase towards the resistance level. An entry price of $0.378 would allow you to buy in at a relatively low point, close to the historical price and below the forecast price. The stop loss should be set at $0.362, the recent low point, to protect against significant price drops. The target price should be set at $0.405, aiming to capture a portion of the potential upside before the price reaches the resistance level. This strategy balances the potential for profit with risk management, making it suitable for a medium-term investment horizon. Based on the provided price information for optimism, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a clear upward trend, with the current price hovering near its forecast and support level. This suggests a potential for continued upward movement in the short term. However, the resistance level is relatively close, indicating a potential for a pullback after reaching that level. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current price, around $2.02. A stop-loss order should be placed at $1.92, the support price, to limit potential losses. The target price could be set at $2.159, the resistance level, aiming to capitalize on the anticipated price increase. This strategy allows for participation in the potential short-term upward momentum while mitigating risk through a well-defined stop-loss order. Based on the provided data for STRK, a cautious investment strategy focusing on the short term seems appropriate. The historical price data reveals a somewhat volatile trend with fluctuations around the 48 cents level. The forecast predicts a slight upward movement, but with some potential for consolidation or minor dips. Considering these factors, a long position could be considered, aiming to capitalize on the potential for price appreciation towards the resistance level of $0.5257. For this strategy, an entry price around 49 cents could be considered, allowing for some room below the current price and aligning with the forecast. A stop-loss order placed at $0.4684, just below the support level, would help mitigate potential losses if the price declines unexpectedly. The target price could be set at $0.519, aiming to capture a portion of the potential upward movement while remaining mindful of the forecast's uncertainty. This approach allows for a balanced risk-reward profile, taking advantage of potential upside while minimizing potential downside exposure in the short term. Based on the provided price information for Solana, a medium-term investment strategy appears promising. The historical price data reveals a generally upward trend, with recent fluctuations suggesting consolidation. The forecast indicates continued upward movement, reaching a peak around $215. This aligns with the support price of $206.99, suggesting a strong foundation for potential growth. Therefore, a long position in Solana is recommended for a medium-term investment horizon. An ideal entry price would be around $208, allowing for a potential profit target of $215. A stop-loss order should be placed at $206 to protect against unexpected price reversals. This strategy capitalizes on the bullish sentiment surrounding Solana while mitigating risk through a well-defined stop-loss mechanism. Jupiter's recent price history shows a fluctuating trend with periods of both upward and downward movement. The forecast suggests a slight upward trend over the next week. Considering the support price at $0.816 and the resistance price at $1.0679, a medium-term investment strategy appears suitable. A long position is recommended, capitalizing on the potential for Jupiter to reach higher levels within the next few weeks. To execute this strategy, an entry price of $0.850 could be considered, allowing for a small margin of safety below the current price. The stop loss should be set at $0.816, the identified support price, to limit potential losses. The target price could be set at $0.950, aiming for a reasonable profit based on the forecast and historical price movements. This approach balances risk and reward, allowing for potential gains while mitigating potential losses. Given the price trends and forecast for render, a medium-term investment strategy focusing on a long position appears promising. The historical price data shows a general upward trajectory, and the forecast suggests continued growth over the next week. Although the price has recently experienced some volatility, the support price of $7.782 provides a solid foundation for potential upward movement. The resistance level of $8.729 indicates that there is room for further price appreciation. Therefore, an aggressive investment strategy would involve entering a long position at the current price of $7.66, with a stop loss set at $7.54 to mitigate risk. The target price could be set at $8.22, aligning with the forecast and allowing for a healthy profit margin. This strategy capitalizes on the anticipated price increase while managing risk through a well-defined stop loss. The medium-term investment horizon allows for potential growth while avoiding excessive short-term volatility. Based on the provided price history and forecast for Solana name service, a short-term investment strategy appears most suitable. The historical prices show some volatility, but the recent trend suggests a slight downward movement. The forecast further supports this bearish outlook, predicting a gradual decline in price over the next week. Considering these factors, a short position on Solana name service is recommended. An entry price around $0.265 aligns with the current price and the anticipated downward trend. A stop loss at $0.2719, slightly above the recent resistance, protects against unexpected price surges. The target price can be set at $0.2436, the support level, aiming to capture potential profit from the predicted price decline. This strategy capitalizes on the short-term bearish momentum while managing risk through a well-defined stop loss. Based on the provided historical price data and the forecast for Doge-Coin, a moderately aggressive investment strategy could involve a long position with a medium-term investment perspective. The historical prices show a volatile trend with recent fluctuations around $0.324. However, the forecast suggests a consistent upward movement, reaching 40 cents by the end of the period. This positive outlook, coupled with a support price of $0.35872, indicates potential for growth. An entry price around $0.335 could be considered, allowing you to buy in before the predicted price surge. A stop loss at $0.320 would protect against any unexpected downward movement, while a target price of $0.390 offers a reasonable profit margin considering the resistance level of $0.39479. This strategy balances risk and reward, capitalizing on the bullish forecast while safeguarding against potential market volatility. Given the provided price data for PEPE, a short-term investment strategy appears promising. The recent price history reveals a fluctuating trend with periods of both upward and downward movement. However, the forecast indicates a potential for continued upward movement, suggesting a bullish outlook in the short term. Therefore, I recommend adopting a long position on PEPE. An entry price around $0.0000205 aligns with the current price and the forecast. To manage risk, a stop-loss order should be placed at $0.0000204, slightly below the support price. This will help limit potential losses if the price unexpectedly reverses direction. The target price should be set at $0.0000216, aiming to capitalize on the potential price increase towards the resistance level. This strategy allows for participation in the potential upside while implementing risk management measures to protect against adverse price movements. Given the historical price data and the forecast for SHIB, an aggressive investment strategy would suggest a short-term approach. The historical prices show a slight upward trend, but the forecast indicates a potential pullback. The current price is close to the support level of $0.0000212, which acts as a potential buying opportunity for a short-term trade. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the resistance level of $0.0000241. An entry price of $0.0000221 could be considered, aligning with the recent price action. The stop loss should be set at $0.0000213 to limit potential losses if the price drops below the support level. The target price should be set at $0.0000240, aiming to capture a significant portion of the potential price increase before reaching the resistance level. Based on the provided price history and forecast for Dog with Hat, a cautious medium-term investment strategy appears most suitable. The price history demonstrates a volatile trend with fluctuations around the $1.85 to $2.18 range. While the forecast suggests a slight downward correction in the coming week, it remains relatively close to the current price, indicating potential for consolidation. Therefore, a long position could be considered with an entry price around $1.95. This price point offers a buffer below the recent lows and aligns with the projected consolidation phase. A stop loss could be placed at $1.88 to limit potential losses in case of a sharper decline. The target price should be set at $2.15, aiming to capitalize on a potential upward rebound towards the recent highs. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses in a volatile market. Given the price trends and forecast for Doge-Coin, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a recent downward trend, with the forecast indicating further declines in the coming week. The current price is hovering near the resistance level of $0.006847, suggesting a potential for a pullback. Therefore, an aggressive short-term investment strategy would involve taking a short position on Doge-Coin. A suitable entry price would be around $0.0068, aligning with the current price near the resistance level. The stop loss should be set at $0.0069 to protect against any unexpected price surges. The target price could be set at $0.0065, considering the forecast and aiming to capture potential downward momentum. This strategy aims to capitalize on the anticipated price decline in the short term. Based on the provided price history and forecast for Near Protocol, a medium-term investment strategy appears most suitable. The price history shows fluctuations, but generally trends upwards, with the recent price hovering around the support level. The forecast suggests a continued upward movement, albeit with some minor corrections. This indicates a potentially bullish market for Near Protocol in the medium term. Therefore, a long position is recommended. An entry price could be set at $5.35, slightly above the current price and near a recent support level. The stop loss should be placed at $5.12, below the recent lows, to minimize potential losses. The target price could be set at $5.93, aligning with the highest price point in the recent history and near the resistance level. This strategy allows for potential profit from the anticipated upward movement while managing risk through a well-defined stop loss. Based on the provided internet computer price history and forecast, a medium-term investment strategy appears most suitable. The price history shows some volatility but generally trends upwards, with recent dips finding support above the $10 level. The forecast predicts a continuation of this upward trend, suggesting potential for further gains. Therefore, an investment strategy focusing on a long position in internet computer is recommended. A suitable entry price could be around $11.50, allowing you to enter after a potential pullback towards the support level. The stop loss should be placed at $11.102, the identified support price, to minimize potential losses. The target price could be set at $12.459, the resistance level, aiming to capture a significant portion of the anticipated upward movement. This strategy allows for a balanced approach, capitalizing on the potential for growth while mitigating risk through a well-defined stop loss. Based on the provided injective price information, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend, with recent declines. However, the forecast suggests a potential upward movement over the next week, reaching prices above the current level. This indicates a possible buying opportunity for a medium-term hold. Therefore, a long position is recommended. The entry price should be around $23, aligning with the current price and the lower end of the forecast range. A stop-loss order should be placed at $22 to minimize potential losses in case the price dips below the recent lows. The target price could be set at $25, aiming for a profit within the forecast range and considering the support price at $24.49. This strategy allows for capturing potential upside while mitigating risks associated with market volatility. Given the price trends and forecast for BTC, a medium-term investment strategy appears most suitable. The historical prices demonstrate an upward trajectory with a recent consolidation phase. The forecast suggests a continuation of this upward momentum, with prices potentially reaching $555 in the coming weeks. Therefore, a long position in BTC is recommended. An entry price of $525 aligns with the current price and the recent consolidation. The stop loss should be set at $500 to protect against unexpected price reversals. The target price should be $570, aiming to capture a significant portion of the forecasted upward movement. This strategy allows for capitalizing on the positive price trends while managing risk through a well-defined stop loss. Based on the provided price history and forecast for THETA network, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with a recent upward movement. The forecast indicates a continued upward trajectory, suggesting a bullish outlook for the medium term. Therefore, a long position is recommended. An ideal entry price would be around $2.39, aligning with the recent price action and the support level of $2.386. To manage risk, a stop loss should be placed at $2.32, below the recent lows and the support level. The target price could be set at $2.52, aiming to capture a potential price increase towards the recent high and the resistance level of $3.15. This strategy allows for potential profit from the anticipated upward movement while minimizing risk through a well-defined stop loss. Given the price trends and forecast for WorldCoin, a medium-term investment strategy appears most suitable. The historical prices show a slight upward trend, with the current price hovering near its support level of $2.177. The forecast suggests a continued upward movement, potentially reaching the resistance level of $2.42. This indicates a bullish outlook in the medium term. Therefore, a long position is recommended to capitalize on this potential price increase. An ideal entry price would be around $2.25, slightly above the current price and below the predicted peak. The stop loss should be set at $2.18, just below the support level, to protect against any unexpected price drops. The target price should be set at $2.40, aiming to capture a significant portion of the predicted price increase while leaving room for potential fluctuations. This strategy allows for a balanced approach, leveraging the bullish outlook while mitigating risk through a well-defined stop loss. Based on the provided data for Hooked Protocol, the investment strategy suggests a long-term approach with a long position. The historical price shows an overall upward trend, indicating potential for continued growth. The forecast price also points towards an upward trajectory, further supporting the long position. Although the price has experienced some fluctuations, it consistently finds support near the $0.4429 level. This suggests a strong underlying demand for hooked protocol. Therefore, a long-term investment strategy with an entry price near the current market price of around $0.442 would be advisable. A stop-loss order could be placed at $0.423, the lowest point in the recent history, to minimize potential losses. The target price could be set at $0.5746, the resistance level, aiming to capitalize on the potential for further price appreciation. This strategy allows for a patient approach, allowing hooked protocol to potentially reach its full growth potential within a longer timeframe. Based on the provided price information for Artificial Superintelligence Alliance, a medium-term investment strategy appears most suitable. The historical price data shows a volatile trend, with recent dips and rebounds. The forecast predicts a continued upward trajectory, suggesting potential for growth in the coming weeks. Entering a long position at the current price of $1.37 would allow you to capitalize on this anticipated upward movement. A stop loss should be placed at $1.32, slightly below the recent lows, to mitigate potential losses if the price reverses direction. The target price should be set at $1.61, aligning with the highest forecast price and providing a reasonable profit margin. This strategy balances risk and reward, aiming to capitalize on the positive price outlook while protecting against potential downturns. Holding the position for several weeks would allow you to ride the potential upward momentum and benefit from the projected price appreciation. Polkadot shows a 2-week price decline followed by a bullish forecast. While the historical price has fluctuated, the recent price action suggests a potential for upward movement. The support price sits at $6.658, offering a potential floor for the price. The resistance level at $7.711 presents an immediate hurdle for Polkadot. Based on the current market conditions and the forecast, a long-term investment strategy appears promising. An entry price of $7.15, slightly above the current price and the recent low, allows for some margin of safety. A stop loss at $6.80, below the support level, would protect against unforeseen market downturns. The target price could be set at $7.70, aiming to capture the potential upside movement towards the resistance level. This strategy capitalizes on the anticipated bullish trend while managing risk through a well-defined stop-loss order. Given the historical price trends and the provided forecast for Filecoin, a short-term investment strategy appears to be the most suitable. The historical price data reveals a recent upward trend, with the price oscillating between $4.92 and $5.67. However, the forecast suggests a slight correction in the short term, with prices expected to fluctuate around $5.44 to $5.89. Therefore, an aggressive short-term strategy could involve entering a short position at the current price, around $5.32, with a stop-loss set at $5.67 to minimize potential losses. The target price for this strategy would be $5.19, aiming to capitalize on the predicted price dip. This approach leverages the recent upward momentum while anticipating a slight correction in the near future. Based on the provided price history and forecast for Conflux, a short-term investment strategy appears to be the most suitable. The historical price data indicates a slight upward trend, but the forecast suggests a potential pullback in the coming week. The current price is close to the resistance level of $0.2152, suggesting that a price correction might be imminent. Therefore, a short position on Conflux is recommended. An entry price of 18 cents could be considered, aligning with the forecasted price decline. A stop-loss order should be placed at 19 cents to mitigate potential losses if the price unexpectedly rises. The target price could be set at $0.165, aiming to capitalize on the anticipated downward movement and secure profits before the price potentially rebounds. Based on the provided Ethereum name service data, a bullish investment strategy is recommended. The historical prices show a general upward trend, suggesting an underlying positive sentiment. The forecast prices further reinforce this bullish outlook, projecting a steady increase over the next week. Although the current price is near the resistance level of $37.86, the forecast suggests it could surpass this level, indicating potential for further gains. Therefore, a long position in Ethereum name service is advised. An ideal entry price would be around $37, close to the current price and below the resistance level. A stop loss could be set at $33, slightly below the support price of $33.01, to mitigate potential downside risk. The target price could be set at $39, aligning with the projected price increase and allowing for a healthy profit margin. This strategy capitalizes on the anticipated upward momentum of Ethereum name service while managing risk through a well-defined stop loss. Based on the avalanche price data, the 2-week price change shows a slight upward trend, but the forecast suggests a period of consolidation. The current price is near the support level of $42.89, indicating potential buying interest. The resistance level of $52.68 suggests there might be some hesitation for further upward momentum. Considering this, a medium-term investment strategy with a long position seems appropriate. An entry price around $40 would allow you to capitalize on the potential for price appreciation towards the resistance level. Setting a stop loss at $39 would minimize potential losses if the price drops unexpectedly. The target price could be set at $48, aiming to capture a significant portion of the potential upside before reaching the resistance level. This strategy balances risk and reward, allowing you to participate in the potential upside of avalanche while managing potential downside risks. The current price trend of BTC shows a slight downward movement in the past 2 weeks, with the forecast suggesting further decline. The support price at $0.04323 indicates a potential floor for the price, while the resistance at $0.05304 suggests an upper limit for immediate upward movement. Given this outlook, a short-term bearish strategy appears more suitable. Therefore, an investment strategy for BTC would involve taking a short position with an entry price around $0.0495, aligning with the forecast. The stop loss should be set at $0.051, slightly above the current price and the forecast high, to limit potential losses. The target price would be $0.04323, aiming to capture the potential decline towards the support level. This strategy capitalizes on the anticipated price drop while managing risk through a well-defined stop loss. Based on the provided information for PENDLE, a short-term investment strategy appears most suitable. The historical price data reveals a recent period of consolidation, with prices fluctuating around the $5.26 level. While the forecast suggests a slight upward movement, reaching $5.46 within the next week, the resistance level at $5.566 indicates potential limitations to this upward trend. Therefore, a short position could be considered to capitalize on any potential price retracement. An entry price of $5.39, slightly above the current price and below the resistance level, would be ideal. The stop loss should be placed at $5.57, above the recent high and the forecast peak, to limit potential losses. The target price could be set at $5.08, aligning with the recent support level and offering a reasonable profit margin. This strategy leverages the potential for a short-term pullback while mitigating risk through a well-defined stop loss. Given the price trends and forecast for the sandbox, a medium-term investment strategy appears most suitable. The historical prices show a slight downward trend over the past 2 weeks, with the recent price hovering around the support level of $0.6087. However, the forecast suggests a gradual upward movement in the coming week, reaching a potential high of $0.696. This indicates a period of consolidation before a potential bullish breakout. Therefore, a long position is recommended to capitalize on this potential upside. An entry price of $0.615 would allow you to buy in near the support level, while a stop loss at $0.605 protects against further downside. The target price should be set at 68 cents, aiming for a significant portion of the projected upside. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses. The price history of Decentraland shows a downward trend, with recent fluctuations around the 48 to 50 cents range. The forecast predicts a gradual increase in price over the next week, reaching around 57 cents. Considering this information, a medium-term investment strategy with a long position seems appropriate. This strategy aims to capitalize on the anticipated upward momentum while managing risk. To implement this strategy, an entry price of $0.495 could be considered, allowing for some room below the current market price. A stop-loss order should be placed at $0.476, the recent low point, to minimize potential losses. The target price could be set at $0.565, aligning with the forecast and providing a decent profit margin. This strategy balances risk and reward, taking advantage of the predicted price increase while protecting against potential downturns. Based on the provided information for ENG Coin, a medium-term investment strategy appears most suitable. The historical price data demonstrates a period of consolidation and sideways movement, with recent price action hovering around the support level of $0.2107. The forecast indicates a potential upward trend, suggesting that ENG Coin could reach $0.257 in the coming weeks. This presents a favorable opportunity for investors seeking moderate returns over a medium-term horizon. A long position would be advisable in this scenario, with an entry price around $0.225, strategically placed above the recent consolidation range and below the anticipated resistance level. A stop-loss order could be set at $0.215, ensuring a limited downside risk while allowing for potential price fluctuations. The target price should be set at $0.250, capturing a substantial portion of the forecasted upward movement. This approach balances risk and reward, aiming to capitalize on the potential for ENG Coin to appreciate within the medium term. Based on the provided information for Uniswap, a short-term investment strategy appears most suitable. The price history shows a consistent upward trend, culminating in a recent peak at $15. The forecast suggests continued upward movement, with prices expected to reach $15 in the coming week. This indicates a bullish sentiment in the short term. Considering the price trends and forecast, a long position is recommended. An ideal entry price would be around $14.80, aligning with the support price and providing a buffer against potential dips. The stop loss should be set at $14.50 to minimize potential losses. The target price could be set at $15.50, aiming to capture the anticipated upward momentum and potentially exceeding the forecast price. This strategy capitalizes on the short-term bullish outlook for Uniswap while managing risk effectively. Given the 2-week price change and the 1-week forecast for Chainlink, a cautious investment strategy with a medium-term perspective appears most suitable. While the historical price data shows a slight downward trend, the forecast suggests a period of consolidation around the $23 price point. This suggests a lack of strong momentum in either direction. The support price at $22.09 provides a potential floor for Chainlink, while the resistance at $25.50 indicates an upper limit for upward movement in the near term. Therefore, a medium-term investment strategy with a long position would be advisable. An entry price at $22.50, slightly above the support level, allows for a margin of safety while capturing potential upside if the price starts to rise. A stop loss could be set at $22 to limit potential losses. The target price should be set at $24.50, aiming to capitalize on a moderate price increase towards the resistance level. This strategy allows for potential profits while managing risk through a defined stop loss. Based on the provided information about Aave, a medium-term investment strategy appears most suitable. The historical price data reveals a fluctuating trend with both upward and downward movements. While the forecast suggests a slight upward trajectory, the relatively close proximity of the support and resistance levels indicates potential for consolidation or sideways movement in the short term. Therefore, an investment strategy involving a long position in Aave could be considered. An entry price around $335, slightly below the current price, would allow for a potential upside while mitigating immediate risk. The stop loss should be placed at $325, below the recent support level, to protect against significant price declines. The target price could be set at $360, aligning with the upper bound of the forecast range and offering a reasonable profit potential. This strategy aims to capitalize on the anticipated upward momentum in the medium term while managing risk through a well-defined stop loss. Given the historical price data and the price forecast for EOS, a medium-term investment strategy appears to be the most suitable approach. The historical prices demonstrate an upward trend, with the recent price hovering around the support level of $0.8443. The forecast indicates a continued upward movement, with prices potentially reaching $0.951 in the coming weeks. This suggests a bullish outlook for EOS in the medium term. Therefore, an investment strategy involving a long position in EOS is recommended. A suitable entry price would be 86 cents, allowing for some room below the current price while still capturing potential upside. The stop loss should be set at $0.8443, the support level, to minimize potential losses. The target price could be set at 94 cents, a conservative target that aligns with the forecasted price and offers a reasonable profit margin. This strategy allows for a balanced approach, taking advantage of the bullish outlook while managing risk effectively. Given the historical price data and the forecast for Tron, a short-term investment strategy appears to be the most suitable. The 2-week price history shows a general upward trend, with the recent price hovering near the support level of $0.2594. The forecast suggests a continuation of this upward momentum, with prices potentially reaching $0.271 in the coming week. This presents an opportunity to enter a long position and capitalize on the anticipated price increase. An ideal entry price for this strategy would be around $0.263, aligning with the current price and providing a buffer against any immediate price fluctuations. A stop-loss order should be placed at $0.2594, the support level, to limit potential losses. The target price could be set at $0.271, the highest forecasted price, allowing for a healthy profit margin. This short-term investment approach aims to capitalize on the immediate upward momentum of Tron while managing risk through a well-defined stop-loss order. Given the price trends and forecast for Suncoin, a short-term investment strategy focusing on a long position appears most suitable. The historical prices demonstrate an upward trajectory, and the current price is near its forecast and close to the support level of $0.02249. The resistance is at $0.02629, indicating potential for further upward movement. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current price, around $0.0247. A stop loss should be placed at $0.0225 to protect against potential downward movements. The target price should be set at $0.0262, aiming to capitalize on the potential price increase towards the resistance level. This strategy leverages the bullish momentum indicated by both the historical price data and the forecast, aiming to capture profits within a short time frame.